Well, let's begin with this. I couldn't be more excited to be here today. Yesterday, I was striving to start the fintech track already. And here with me, I have 4 fantastic panelists that will talk about how revolutionary is the fintech space and what they are doing in their businesses to bring this on. So please welcome the 4 panelists that we will introduce briefly. Well, Kicho here, country manager at Trade Republic. Trade Republic is the German unicorn. It's a trading platform for B2C that helps people to invest smartly. Then we have Peter, who's founder at Uncapped. It's revenue-based finance, which we'll talk about this later, that helps entrepreneurs not to dilute and raise growth capital for the companies. Then we have Juan with us. He's also founder at Bupos, and it's also another revenue-based finance platform, in this case more focused on M&A deals, so also helping founders to get funded to raise M&A funds. And then we have Luis, director at Zone to Boost, which is the open innovation program to help e-commerce and fintech, which is sponsored by CaixaBank and Ingenico. So 4 amazing panelists to talk about how their products are revolutionary. As you know, in the past years, the finance industry has evolved a lot. We have new asset classes, new ways of investing. We have new payment methods, and the list could go on and on and on. So I thought the best way to start is to ask them what makes their products revolutionary. So we can start with you, Kicho.
Yeah, I can go. First of all, thank you for inviting me. I'm excited to be sharing with you the roundtable and to be here today. I think that for understanding exactly why Trade Republic is revolutionary, we need to understand something and take a step back to understand what's very important for the company, which is the timing. Not exaggerating, give it a thought. Our generation is facing one of the biggest challenges really soon, which is the pension gap, which means that if you think about many headwinds we'll find as a society, which are inflation, the demographic pyramid being inverted. If you think about the life expectancy to be longer than ever and expanding, and many other factors like the interest rates, which are increasing now, but they're really, really low. We're facing a really big challenge. The pensions, as we think of them, are not going to exist in some years. And that's going to have a massive impact in everybody's life. And investing and saving, it's more important than ever. And I think nobody has been able to give a fair access. Nobody has been able to educate population on how important it is to invest, especially in Europe. I think in other countries like in Nordics maybe, or in the US and Canada, it's something that everybody knows. And nobody has created this feeling of being rewarded and feeling that you're investing yourself by investing and saving. And I think what's revolutionary about us is that. It's giving a fair access, it's being transparent, it's giving super low commissions, which is really important when you're investing long term. And yeah, that's the key.
You cannot trust us straight to provide your pension, so get yourself ready for the future. Fantastic. What about you, Peter?
So my story about founding Uncapped comes from a bit the other side. I used to be a VC before starting a company, and as a VC investor, I met hundreds, thousands of these good companies where founders were willing to part away with a big chunk of their child, of their business. And in many cases, this money were not spent even to build something, build any technology or invest in R&D. We just wanted to spend this money to buy more ads, or buy more inventory, or buy more salespeople. Things that they knew will deliver growth because they have proven economics. And I always felt as a VC that I'm kind of ripping them off, and there must be the smarter way for them to fund the growth of their business. And venture capital is an amazing institution and amazing source of growing the business, but it shouldn't be the only one. If you think about the larger businesses, they always fund their growth through the debt. And hence, after several years in the VC world, the idea came to my mind, But now we have so much data, and these companies, use all these platforms like Stripe and PayPal and Shopify, and you can ingest all this data and be much smarter about it, and hence Uncapped was created. And what we do is, within 24 hours, we give the businesses, tech companies, the debt capital to fund their needs, to fund the working capital, to fund their marketing, inventory, or growth.
24 hours, you said? Wow, that's amazing. What about you, Luis? Sorry, Juan.
Okay.
I
was going to say that the key word behind the fact of our revolution is data, because in the end, what we're doing is pretty similar to what Uncapped is doing, in the sense that we offer financing, very quick financing, 48 hours, for a specific use case, which in this case is M&A, which was kind of an orphan type of financing. But the key, or the key difference compared to what a bank could do, is that we just pull the data directly from all these sources, then we can build an underwriting file in a couple of days, compared to what a bank does in terms of using the statements, analyzing it, making sure that everything's right. When you pull the info directly from the Amazon marketplace or from Stripe, you can verify that very easily, and you can make sure that you're lending on the right company. So I guess that data is probably the key word behind the revolution in terms of financing, new financing business models.
It could become a deal breaker when you have easy access to money to acquire a company, being faster than maybe another person that might come and acquire it. It's fantastic. So, Luis, want to boost? Tell us about it.
I'm a VC, so I don't have any business model to explain, but I'm more than agree with them that data is the key. But also, I think that the different component that you have that make you apart from the traditional institutions is the flexibility. At the end, you're able, as you were saying, to take the data in 1 hour, 2 hours, you analyze them, and in 24 or 72 hours, you have an answer. We are not able to do this. And this is because they are focused for the customer. They have the answer when they want. We have to take time, and it's something that the client doesn't want. So they have the customer centricity that it's needed, and we have to work with them in order to achieve this, because it's impossible for us.
Definitely,
We
we'll
have
touch
different
base.
rules, legacy, legislation.
We'll touch base on this kind of collaboration later on. We kind of discussed about data, how this is important, and I wanted to go deep a little bit on revenue-based finance, because I know the credit scoring probably is one of the key aspects of your revolutionary business model. So can you tell us a bit more how you build this, how you disrupt it from what's current stage of art?
Sure. It took us now, we're building our company for 2.5 years, and we are still, I would call it, in a day one. When we started the business, I approached every single credit person in London or in Europe more broadly to hire someone very, very smart to help me figure out how to credit score these companies. And the unfortunate truth was every single person I met had a very different perspective to ours. They wanted to, especially when it comes to scoring smaller businesses, they wanted to look at credit reports and the personal credit file of the directors. And they never thought about, hey, I want to go deep to the business. What are the unit economics of a business? How do I analyze it? For the larger business, they wanted to go to the, some sophisticated assets, and they were very, very, very conservative. They didn't look at the real-time data. What we do is we go very, very deep. We go to the raw source of the data, and we analyze deeply the company performance. We integrate with their Google, with their payments, and we are looking at things like how many customers are coming back, how fast are customers back, what SKUs are selling, what is the margin of SKU, how is it trending all of the time, what is the conversion ratio on the website, because we go to the Google Analytics data. We're looking at how are the channels performing, is your paid channel better than other channel. All these insights are very, very different and real time versus what the traditional lender is doing. So when, for example, COVID started, when the markets collapsed, we were able to identify the customers where their sales data were going up, and we only had to have 10 days of data. After 10 days, we see the trend. Well, everyone is down, you guys are up. Well, go for it, sell as many these blankets or as many food delivery to home as you want. We'll give you the funding.
Wow. And to me, I must ask this follow-up question, because I don't want you to share the secret, the kind of source, But how is it? Is it a common model that you apply to any business, or you kind of differentiate these kind of weights of all the aspects that you're evaluating case by case? So there's some manual work, or it's kind of a model?
There is manual work. Okay. So the thing is, our average loan is in hundreds of thousands of pounds. So while we can serve small customers, we can give someone 5,000, 10,000 loan. Average advance we're giving is in hundreds of thousands. The largest ones is like 5, 10 million. You cannot give a 5 million loan to someone like that, but our team is focused on a specific customer segment, which is e-commerce, Amazon sellers, SaaS businesses, tech companies. We understand them deeply, we have data, and we can analyze them in a second. My team, customer connects the data, my team will see this whole model with the data and all the factors, all the analysis within a couple minutes. And then they can analyze and understand what's going on, what's not going on. We are looking how our gross margin is developing, how our contribution margin is developing. We have a forecasting models which forecast us the cash flow and the balance sheet of a company going forward. And this allows us to make the decisions fast and efficiently.
Very interesting. How is this different or common in case of M&A?
I guess that in our case, we do all those things. In the end, the key here is to focus on specific verticals that you understand well, and you get both the financials of the company, but at the same time, operational parameters that you can pull from the Amazon marketplace or from Stripe. For example, you can rebuild cohorts based on Stripe transactions. That's the type of things that we do. But we also underwrite the owner of the business. In the end, we're betting on someone. So let's say that you, Carlos, are buying a $500,000 business. We would lend 400K for you to buy the business. So in the end, we're partnering with you. So other than the business, we also underwrite bios. So how do we do that? Well, part of our engineering team comes from a reputation company called Trady. And some of the technology that they were using, we're applying here. So we take a look at the social network profiles, and we have like a specific questionnaire and make sure that they have the right experience, the right track record in terms of managing the business that they want to acquire. For us, that's also super important.
Very interesting, very interesting. Also taking into account who you are lending this money to make sure that this is going to be a success. How is this different? I mean, what's the secret sauce in case of Trade Republic, which is more B2C focused, right? How you make things different for personal investors?
I think it's access. Going back to my initial idea, I think if you think of how hard it is to like open a brokerage account somewhere, if you think about, let me do a question maybe in the panel, like how many of you are investing? Okay. How many of you know like how many commissions you pay per trade or per custody? Well, half. I think that the secret sauce is giving easy access, like giving people the ability to open an account really quickly, in a really simple and straightforward way. Being really transparent with commissions, which is a key part of like saving in the long term, which is our main focus. We're super focused in trying to make people save in the mid-long term. And the last thing is education, which is something that we're starting to develop right now. Like, if you look at our customer base, the numbers we share are from May 2021. With after 2 years of operations, we had like 1 million customers back then, and 50% of them were newbies, people that never invested before, which reveals a lot about like how simple it is to step in, to start trading, to start like setting up savings plans. And yeah, I think it's access, which translates into pricing, commissions, transparency, and easiness of use, and an inviting platform that invites you to like invest in the long term instead of like speculating and trying to make money really fast.
That's fair enough. So these guys are doing amazing things. How do you see the collaboration between traditional banks and new fintechs that are bringing all this innovation into the table? And I think that's precisely what you are doing in the Open Innovation Hub.
I think that at the end we have to work together, no? Because in the banks, I don't mind if CaixaBank, Santander, whatever it is, they work really good. I would say really good, but they get used to working with traditional, let's say, sellers or traditional companies or traditional. And this is the difference because these guys are doing things differently. For example, there has as you have said, you have focus, no? In verticals, for example, Amazon sellers, e-commerce, tech companies, hypergrowth companies. And these kind of companies need something different that we get used to doing it. So we have to work together with them. They have the KYC and KYB, the onboarding of people or companies. It's amazing. They are able to do it in 1 hour or whatever it is, but we have to send them to the branch. We have to ask for thousands of documents, and also how they are touching on modeling the risk engines that they have. No? They are getting the information automatically from the CRM, CMS, ERP. We ask for this information. And only with these small things, they make us apart from us. And that's what we want to get. Obviously, inside of the bank, it's quite difficult. We have many different topics, as I was saying. The legacy, our infrastructure, it's quite difficult to change, and it's not so easy to take the information from the CRM. No, we have to do, first of all, we should have everything through APIs, and it's not like this, because we are not a new company. So there are so many things that we are not able to do yet that we have to work together with them. And also, I think that I think for one side, you need us, no? Because it's quite difficult to get the people, to get companies, and we have the clients. So I think that the best thing that we can do is work together. It's a perfect match. And always there is, I think, the formula to do it.
What would be a good example, for example, that you built in Zontoboost that could, or maybe if it's confidential, we won't go into this, but I guess what you were saying is let's learn from each other, because there's knowledge base on the traditional banks that it's super valuable for fintechs, and there's fintechs that need also customer base to prove their model and scale, so there's always synergies and paths together.
For example, there is a small company called Menir that they help companies or big banks and funds to make easier to recover the debt that you have with clients, for example. No? We started with them working within a small part of the bank in order to reduce the timing that we need to recover our money at the end. And they used data, and it was fantastic. The results, they was amazing. From 120 days as average, we reduced them till 90. That's really amazing. It's something that we were not being able to do without them, because everything is based on, let's say, IT, technology, and data, and they do it perfectly. Then the base of all of you is the same. Data, a good modeling and scoring, good technology, and it's something that we need. And these kind of things, it's what we do.
We could touch base in many areas of your business that are innovative, but I think a common one would be onboarding, right? Making a difference when a new customer comes in and you provide them with the access to your service. How you do this differently? We can start maybe with you, Kincho.
Yeah, we're trying to simplify the funnel as much as possible. I think we're learning a lot from other players and traditional players as well, like on things to improve. And our obsession is to make it as simple as possible and fast. We work with an external partner, in our case, and we work really closely in trying to understand, learn, iterate, improve things really quickly. And for us, it's key to be compliant like anybody else. But for us, it's also like really, really important to give a super simple access. So yeah, we have a massive focus put on trying to make it easy to understand for many people who are investing for the first time, in our case. But also for people who want to, I mean, if you compare like the onboarding of a traditional bank when you open a brokerage account to any online player, it's a different world. So yeah, we're trying to improve it as much as possible, and we are listening from customers, we are looking at numbers and improving the funnel as much as possible.
Fair enough. What about you, Peter?
We have two stages of onboarding, and one is the one where you share the data with us, and then there's a final one, which normally bank would do, which is like KYCAML. It's very last, and for us, this part is not very problematic because customer already agreed to take money from us, and now for them to do the due diligence KYC is, they want the money, so we'll do it. But the first part is very interesting because there's a huge trade-off with amount of data you need to underwrite versus let's say how many steps there are in the process. So on one hand, we want to minimize the amount of work that the client has to do, but then this means we have less data, and finding the right balance in the trade-off is very, very important. And all the time we're figuring how can we minimize the amount of work that the client has to do. How can we make the decisions without as much information as we really, really
So Mark,
want from the customer.
missing,
And
but
then there is another thing, which is the trust. The customers, when they give us, we ask for a lot. We ask for the access to their Shopify, to their Stripe, to their bank account, accounting software. Building a trust and giving the confidence to the clients that the data are safe with us is difficult, it's problematic, and probably this is one of the biggest obstacles we have in the funnel, and you know, we're working hard to give it to the customers and encourage them to share data with us.
Interesting.
Yeah, when people think about KYC, AML, and all these things that regulation forces into financial institutions, it sounds like a very heavy layer of things that you have to ask, but in the end, it's not so much of a big deal. I mean, there's a lot of tools out there that you can integrate with to make the process really easy. So I guess it's a matter of having the right user experience to make sure that everything happens very quickly and make sure that customers have everything they need handy, which in the end is a passport, info about the company, this type of thing. And that's one type of onboarding that can be done, I would say, relatively easily. You obviously have to have checks to prevent fraud. And then there's the other type of onboarding, which is the type of info that you want to gather from the customer. And in our case, as I said, we gather information from both the owner of the business and the business itself, even if we are kind of lending on the business and we ask no personal guarantees from the owner, but that's kind of an important process. And I guess that we're still learning about that, by the way, in terms of what amount of friction we want to add at the beginning of the process to make sure that we serve them well. Because in the end, our customers, in many instances, contact us when they're looking for a business. They haven't detected the business that they want to buy. So they contact us, and they're scouting, they're searching. So that type of people, we don't want to add too much friction at the beginning, because we want them to get comfortable with the product. We want them to analyze or see how we analyze businesses and work with them through the process. But then comes a point in time when we have to stop and we have to say, okay, if you want to move further, then you have to let us know a little bit more about you to make sure that you're the right partner for us. So it's kind of, we're still learning on that, but it's an interesting problem to solve.
Fair enough. Do you want to add on something, Luis?
At the end, I love what they are saying. I love. But you are not a regulated institution, and it's something that let's say it's the key. Because once you have a big structure and you're a regulator under the central bank, the risk team, compliance team comes to you, and here there are some people from solutions from CaixaBank that say, no, we would like to do the things like BOPOS. We get the data from here, we don't ask this document because we don't need, because he is not asking for it. And when they come, they change it completely. No, the regulation says this. And this is the vision that you have, that I think that we have to get some of it, that you have to take some risk, but until when? So you are taking a higher risk than us, asking for the onboarding, only for the information. I'm just saying this. And we are not doing this. And this is the difference. And the client, what they want, what you are doing. At the end, I don't want to ask for, I don't want to give you my DNA, my passport, my whatever, register mercantil, or any kind of document. So this is the things that we should find the balance between you and us. At the
I disagree. Listen, we are fully compliant, and I think if you want, you can do everything online and smooth way to the customer.
Sure. And to build on that, like we are regulated by BaFin in Germany and supervised by CNB.
So are we.
But yeah.
Okay, but at the end, the interpretation of compliance. See, I'm with you. I mean, but they come to you, and there are different visions. And the visions that the bank takes is the hardest one, and this is the difference.
No, the thing is, the banks don't understand the modern customers. They don't understand the startups. They don't understand the Gen Z customers, and that's why I'm happy about it. This is my customers, right? Like, I hope the banks will fail for many more years.
Sure, and for this, my position appeared in the bank. No, at the end, we are trying to learn from you because we have a lot to learn. Obviously, we have many things really good, but talking about user experience, you are much better. We don't have anything to do.
I think it's
Like this.
that's a super.
It is what it is.
And yeah, I share more this vision than, than the traditional bank's vision, obviously. But in our case at Conto, it's very much about iterating. And obviously, there's always conversations with the regulators, with our compliance team. But it's finding the right balance between giving ourselves homework to collect or to find the sources of data that we need to onboard customers and providing like the least homework to customers, so they provide the minimum information that is required, so we can pull information from other sources and make the whole experience much easier. And I think what we do is to test and iterate. So since we are very data-driven, what we try is to do A/B testing on the funnel, see which things work, which things doesn't, and obviously following compliance, which is applicable to all of us.
And to add on what you're saying is, I would love to say that regulators need to like learn as well. Like the world is changing, the customers are changing, the way people consume things is changing. And I think the disruptors we have, we're really close to regulators to like help them understand exactly how things are changing. So yeah, just reinforcing that we work really closely with them. And we try to share best practices, we try to share how do we see customers like behaving. But it's a key part of our role as disruptors in an industry to be really close to regulators and to, if possible, like educate them on things that are changing.
100%.
Yeah.
I wouldn't like to let you leave without asking you a very important question. We are in uncertain times. You touch base on it, interest rate raising, quite uncertainty in terms of funding and so on. What's your vision for the next few months, years on your industry specifically, for your future prospects, and yeah, how we can keep revolutionizing this finance industry? Let's do maybe 30 seconds each.
In my opinion, like even though it's going to be a painful moment for some startups, it's a good thing for the industry in general. I think that strong companies with strong value propositions are gonna thrive. It's a good moment to take over the market and to take over like some competition that wasn't doing a good job. So I think the cleanup is going to be hard, but I think the cleanup is going to be good for the industry in general. And regarding funding, I think, yeah, winners are going to be able to raise. We raised a new round of funding this week. And I think that strong players are going to be able to like get some funds from investors, meanwhile others are going to struggle a bit.
Completely.
I'm actually a huge pessimist. I see the data of thousands of companies in real time, and the data I see are worse than anyone sees in the papers and everywhere else. I think it's going to be a bloodbath, and I would encourage every founder to prepare for the worst, because what we see is just very, very scary.
Wow.
Yeah, I can tell you what I'm seeing in the market right now, which is, I don't know what's going to happen in 6 months, but I can tell you what's going on now. And this is a mostly US vision, because our company, basically our clients are in the US. And we're seeing that people are acquiring companies at lower multiples. That's something that's happening now. So all the bigger players are not buying companies anymore. And that kind of leaves more room for people who have cash and probably are less competitive with, when in an environment with big players buying things. So it kind of helps us in a way. And that's something that's happening, definitely. And then in terms of performance, the companies that we're analyzing these days, we've seen as well a trend in worse performance. I mean, 1 year ago, most Amazon sellers were kind of booming. SaaS businesses were thriving. And what we're seeing now is we still see businesses that are thriving, growing, and doing well. A lot of businesses that are kind of flat-ish going down. And there's a new cohort of businesses that we hadn't seen before that are going down 20%. So I guess there's going to be winners and losers out of this. So that's what I can extract from that.
What's your view, Luis?
I would say that it's going to be similar as the internet bubble in the 2000. I think that companies, and currently the VCs has spent a lot of money with high prices. And I think that everything is going to start to establishing to their position. No? And in talking about fintechs, that I invest in many of them, and just tell to them that just take care, be quiet with the money, and let's see what is going to happen in the next year. Obviously, we don't know. But I really think that the small funds are starting to dry. Big ones are starting to put money smartly, let's say this, because I know a lot of them that they were saying, I want one KPI. Which one? Marketing. How much you are spending in marketing? This is fair? No. And I think that these things are going to change. And as they are saying, the companies are starting to grow in a lower steps. So things are going to be hard next years.
That's, well, amazing predictions. We are running out of time, and I'm very sorry to leave because I would spend half an hour or an hour more with you guys. It's been fantastic to get your thoughts on the industry, on how we are revolutionizing this sector, and thank you to the audience for being here. Round of applause.